Hello everyone and welcome to my channel. In this video, we will continue examining revenue recognition issues. We will look at revenue recognition for non-refundable upfront fees. It is common in some industries for businesses to charge customers a fee at or near the inception of a contract. Before we get started, thank you for liking and sharing this video. It really helps out this channel. Please consider subscribing so you don't miss new videos. Non-refundable upfront fees are payments from customers that happen before a product's delivery and the service's performance. They generally relate to initiating, activating, or setting up a good or service to be provided or performed in the future. In most cases, upfront payments are non-refundable. Therefore, we will concentrate on non-refundable fees in this video. The most common examples are membership fees in a health club or activation fees for phone, internet, or cable services. Why is it important to analyze each arrangement involving upfront fees? We must determine whether revenue should be recognized when the fee is received. Let's look at what FASB ASC has to say about it. If you are unfamiliar with the Accounting Standards Code, watch my videos. I am posting the link to the playlist here and in the description below. We are looking at ASC 606, which discusses revenue recognition. Non-refundable fees are covered in ASC Topic 606, Subtopic 10, Section 55, Paragraph 52. Suppose the non-refundable fee relates to a good or service. In that case, the entity should evaluate whether they account for the goods or service as a separate performance obligation in accordance with paragraphs 606, 1025, 14 through 25-22. Let's look at an example of upfront fee consideration. John signs a one-year contract with Montgomery Health Club. Per contract terms, John must pay a non-refundable initiation fee of $200 and a membership fee of $50 per month. Montgomery Health Club determines that its customers, on average, renew their annual membership 2 times before terminating it. We need to decide what amount of revenue Montgomery Health Club should recognize in the first year. In our example, the membership fee arrangement may be viewed as a single performance obligation, as similar services are provided in all periods. Montgomery Health Club determines the total transaction price to be $2,000, which is the upfront fee of $200 and the 3 years of monthly fees of $1,800, $50 times 36, and allocates it over the 3 years. In this case, Montgomery Health Club would report revenue of $55.56, $2,000 divided by 36 for each month for 3 years. This is the most usual approach and should be used for homework problems unless directed otherwise. The one-time initiation fee will be initially recorded as deferred revenue, and then revenue will be recognized monthly for 36 months. Monthly membership fees will be recorded as a debit or increase to cash, and a credit or increase to revenue. So basically, we only need to worry about the upfront non-refundable fee. It cannot be recognized upfront. Revenue needs to be recognized over the average term of the contract. In some cases, the initiation fee might be viewed as a separate performance obligation. It is usually the case if a renewal option is offered at a lower price than normally charged, possibly with different services. In our example, in the first period, Montgomery would report revenue of $600, $50 multiplied by 12. The initiation fee is considered a separate performance obligation. It would be allocated to years 2 and 3, $100 each year unless forfeited earlier. I hope you found this video helpful. If you did, please subscribe, hit that like button and ring the notification bell so you're notified when we release more videos like this. Thank you all so much for watching, and I hope to see you all again in the next video.